to the first webinar of this week of the Morning Market Review. It's Monday, it's the 17th of July. My name is Russell Shaw. I'm a Senior Market Specialist at FXCM, and my email address, rshaw@fxcm.com. And if you'd like to correspond with me, that's the email address to use. Just going to go ahead and bring up our disclaimers. We'll start off with a high-risk investment warning. Good morning, Zanetta. Pleasure to have you on the webinar. Demir and Kim, thank you very much for joining. Much appreciated. I'm just going to bring up our next screen, which would be the commentaries disclaimer. I'll just keep this on screen for a few moments. All right, and just our references, MarketScope and TradingView. I think we'll keep most of the analysis, if not all of it, in MarketScope. And I think it's worth just bringing up the China 50. The reason I want to bring up the China 50 is that Chinese GDP did come out today. It was disappointing. It's actually, for any other region, it would have been superb. For China, it's disappointing. It came in at 6.3%, and the forecast was for 7.1%. So I think that might be a catalyst to unwind some of our overbought conditions. I think we may see some risk off today. In terms of what the China 50 looks like, let's just put in some peaks and troughs here and just get an idea of what the composite is doing. And once we put peaks and troughs in, we can see that we've got a reference peak here, we've got a reference trough here. So once we've got these, we can see there's a lower peak here. I'm a little loose with the labeling here. This is, but I think in the spirit of the trend, we've got it right. Lower peak. Here's the lower trough, right? So it's not a strong-looking index, is it? It's and just to confirm, you can see the weekly RSI is below 50, and as long as we maintain below 50, the China 50 most likely under pressure. I'm finding the China 50 very disappointing. When the year started, China was certainly something that was being talked about as a value proposition, and it just hasn't panned out that way. In fact, what we can do is put in a trend line as such, and perhaps let's just see if we can pull a parallel trend line. So it's going in this sort of downwards channel here. It's just testing the upper channel, and you know, if it continues to move in this channel type of fashion and the RSI remains under 50, there could be some more downwards pressure, and I think that's putting a bit of a nervous, it's bringing nerves to the market, a nervous start to the week. So what we can do is we can take a look at the DAX just to see how the DAX is lining up ahead of the cash open. The cash open is going to be in about 13 minutes or so. Given the fact that we have let's go through the daily chart just before we go to the DAX. We'll just go to the Chinese daily, and you can see how it's really come down. It was really sold off over the Asian session today. So let's just go through to the DAX, take a look what's happening pre-market with the DAX, and that could set up the mood for the European session. And you can see that the DAX futures are starting to push below this blue band. The blue band's the border between what we call zone 1, zone 2. Zone 1 is where the bullish action takes place. Zone 3 is where the bearish action takes place. Zone 2 is your kind of no man's land, it's your neutral area, but when we talk about it in terms of a relative weakness or a relative strength, the movement from zone 1 into zone 2 certainly is a step backwards. It would be relative weakness. So let's just see if there is further weakness if we get pushed further into zone 2. Just like the China 50, I guess, has been a bit of a disappointment, the DAX over the last few weeks has also lost a lot of its momentum. I think it's worth just doing a study on the DAX over the last few weeks and then come back to the daily chart. So let's go through to the weekly, and you can see we actually had a terrific trend over here. Really terrific trend. And when I say terrific trend, we've got a trough, peak, higher trough, higher peak, higher trough, higher peak. It's all looking really good, but then the trend line gets broken. Now, the trend line in of itself doesn't tell us that the trend has ended, but it does tell us that the momentum of the trend has waned considerably. So what was quite a strong upwards trend has now turned into something a lot less robust, so to speak. And in fact, we do have some downside pressure over the last few weeks. 1, 2, 3, 4. Just over the last 5 weeks, we have been pushing down on the DAX. I've started relabeling in terms of peaks and troughs. So I've put the reference peak over here. I've put the reference trough over here. And I want to see what kind of a trend develops from these 2 points. So we're lacking price action. We're lacking points on the price chart to give some clear indications. So we're just going to have to be patient with this one. I can see that the I beg your pardon, the RSI is above 50, and if it remains above 50, then I would suspect that we do get some sort of upwards momentum. However, I'd like to see a bullish reference candle, and we've spoken about bullish reference candles fairly recently. We'll talk about them again in the future because they are really very useful for our type of analysis. And here is the reference candle. It's the lowest candle in at least 3 candles. Well, this is actually there's a 4th candle here, and we just want to see if we can get price to break above the reference candles high. It doesn't look like it's doing that. Again, I would suggest at this particular point in time, the sentiments risk off. So I'd be very surprised if we got any movement towards the high of the reference candle. And if you go down to the daily chart, we could see let's put in peaks and troughs here. You can see in a lower time frame just the pressure that the DAX is facing. So what I mean by that, let's go ahead, put in a reference peak over here. Let's put in our reference trough here, okay? Again, once we've got the references in, it makes life a little easier for us. So we can label this then as a lower peak, right? And we can label this as a lower trough. So on a daily chart, that's trending down, and then it looks as if we've got the next lower peak here. Now, that's interesting because if we get another lower trough, that's really going to be risk off. That's going to be a big sell down. So the next question we're going to have to answer, and again, we're not going to predict, we're going to rather see what the index gives us. Are we going to get a higher trough here, or are we going to get a lower trough, sort of somewhere down here? So you can see that we do have a bearish sentiment on the daily chart of the DAX. Ideally, we get some sort of pullback, but that pullback charts the higher trough, and that creates a platform for the next higher peak. That would be sort of ideal, where it turns sort of positive for us. But we don't have that yet, and that is obviously speculation. So the idea here is we do have some downwards pressure. Keep an eye on this RSI. It is above 50, but look how it's hooked. It's hinged. It's heading back towards 50. And so the momentum does seem to be sort of challenging zone 1 and potentially cooperating with the movement from zone 1 to zone 2. Let's go through to the hourly chart here. What needs to happen on the hourly for for the DAX to keep some sort of bullish color to it? In other words, when I say bullish color, what needs to happen for this to push back into zone 1? Well, the pivots need to hold. So we've pushed back to, let's get rid of this. We don't need this anymore. We've pushed back to S1. So I'd say keep an eye on the S1, S2 levels. This looks to be the logical place for support. What needs to happen here is that the moving averages need to cross to the upside. That would be trigger 1. And then the stochastic would need to cross to the upside as well. But importantly, the stochastic needs to get out of this lower quintile. Okay, if it hangs about in this lower quintile, I think there's going to be a tough day here, because the lower quintile there's no such thing as oversold in the stochastic indicator. I have read it in some textbooks, but the formula for stochastic doesn't make provision for overbought, oversold. What it does make provision for is for strong momentum to the downside or strong momentum to the upside. So this is strong momentum to the downside here as we get to towards the market open, which is in about 5 minutes time. So the risk off, or the nervous sentiment that we've seen through the Asian session, I think is transferring itself into the European session, and that might make for some tough trading today. The sort of opposite to that would be if the S1, S2 levels hold as support, and we get the triggers to the upside. And then what would be really surprising would be if the stochastic makes its way to the upper quintile and holds, because then we'd have sort of a dip here, wouldn't we? Now, this is a good example of what happens when we get to the upper quintile and holds there. See that? Get just a superb run. So if we hold to the lower side, we could get a sell-off, okay, which would be, see the cash open in about 4 minutes. All right, so you can see a little bit of nerves coming in on the DAX open. Let's go through to Forex. Let's start off with the US dollar here. A very interesting and a fascinating study, the US dollar. Let's start off with the weekly. Definitely an instrument that we look at constantly, because I believe that there is a ripple effect from the dollar outwards. I think that as the dollar moves, it affects other instruments. And well, the labeling here shows a primary downtrend, doesn't it? Lower peak, lower trough. And just to let you know how we got to this point, okay, we got to this point via a breakdown from a symmetrical triangle. Okay, so there was this breakdown, and now we can take out the converging trend lines. I don't think we need them anymore. Now it's all about trend analysis. Lower peak, lower trough. Well, it's pushing down. Okay, and then take a look at the RSI. RSI is below 50, isn't it? So there is some real pressure on the greenback here. Real pressure. However, when we take a look at the daily chart, you can see that it's gone over sold. Now this is the RSI. The RSI does a much better job than the stochastic of measuring overbought, oversold, and that's precisely why we've got the RSI in our layouts, because it tells us when there's a risk of a counter trend movement. So we went over sold here. Well, that's now starting to correct, and we're seeing the dollar starting to bounce up. I think it would be completely plausible to see a jump in the dollar, okay, and still remain in zone 3. Now, what would be interesting is that the dollar is regarded as a safe haven. So if there's a jump in the dollar, it means money is moving towards a safe haven. Or the reason is the question we've got to ask is, why would it be moving towards a safe haven? And the answer to that is because there is a risk off sentiment. Well, that fits in with the scenario of Chinese flow over. When I say Chinese flow over, the GDP missing, coming in lower than that 7.1% expected, creating that risk off atmosphere, and that flowing over into the next session, the European session. So a bounce in the dollar here wouldn't be surprising if there is some sort of pull down in the DAX. That will be very interesting. And just to sort of really drive the point home, I'm going to go through to the NASDAQ, which is, of course, probably the best example of a growth index, of a risk index. And when we go through to NASDAQ, what we can do is we can take a look at the weekly chart on the NASDAQ, and you can see that it is heavily overbought, So again, that fits into the narrative of some sort of risk off movement just to normalize NASDAQ. Now, I don't know how this is going to play out, because guess what? We're right smack bang now in the middle of Q2 earnings. So we started off with the bank earnings. Bank earnings were really good. As we start seeing the tech earnings come out, as we start seeing news regarding artificial intelligence, well, that's going to have a direct bearing on NASDAQ. And I just wonder what that interplay is going to be like between a overbought NASDAQ, and it's getting quite severely overbought now, how to the point, you know, where you've got to think it has to come down. It can't stay overbought for very much longer. The longer it stays overbought here, the more it starts to look like a bubble. Okay, so we just got to watch this very carefully. It's been overbought now for 1, 2, 3, 4, 5, 6, 7, 8. This is the 9th week we're going into overbought. So to me, it's really frothy. I just want to try and put the story together now as we conclude. Disappointing GDP out of China, manifesting itself into some sort of risk-off type of environment. We can see that the dollar is also oversold, so some sort of balance there seems to fit into the narrative of a risk-off. NASDAQ, heavily overbought. Well, maybe we get some sort of pushback there. All very interesting because we're right in the middle of Q2 earnings. All right, that's where we will go through for this morning. We'll conclude at this point. Let me just see, there's a comment here. Do I use the DAX as an indicator for the euro, from Kim? No, I don't. I would use the dollar as the safe haven. If there's money going into the euro, Kim, it would suggest to me that there is movement out of risk havens, and that will probably be bullish for the DAX. So I would suggest, and I'm going to tag subject to correction here, but I'd suggest euro probably has some sort of positive correlation to DAX, whilst dollar has some sort of negative correlation to DAX. Does that answer your question there? Yeah, okay, cool. All right. Let us wrap up at this point, guys. Thank you very much for joining me this morning. I want to wish you guys a great day, a great evening ahead, and we shall chat again tomorrow morning. Thanks very much, guys.